India's demand for gold is likely to remain strong in the face of higher prices. Forecast of above normal rainfall and the favorable macroeconomic backdrop should mitigate any impact from rising prices in the second half of 2024.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Market Rundown. Today, we will take a very close look at Indian demand, and we'll go through what happened yesterday. Let's start with the prices. The dollar is up 9 after dropping 50 yesterday. 10-year yields are up 2.5 after being a little bit stable to lower yesterday. S&P 500 is up 2 handles. That's after a down day. The VIX is 1452, overperforming to the downside when stocks drop, I mean. Gold is 2463, up 5 and change after being down about 10 yesterday. At one point, up 10 to 15, up 20 actually. Silver up 12 cents. That's a bounce after being down at one point during the day yesterday over $1. Copper down 1.74% at 433. Gold is 2463. Silver is 3042. WTI 8268, down 37. Natural gas $2.04, unchanged bid. Bitcoin is back on its horse, up 500 at 64,630, but Ethereum is leading that sector, asset class. What are we calling it now? Future money or future bubbles? Ethereum is 3442, up 55. That's 1.6%. Platinum, palladium, both down a little bit. 949 down $2 for palladium, and 996 up $4 for platinum. Gold, silver really took it on the chin yesterday. Gold was down, what, $10, $20 at most at one point. Silver was down over $1. But it's consistent with what we were talking about. Platinum, palladium, we did that. Grains, soy, corn, and wheat. You can't see wheat, but you have to trust me on that. Soy is down 2 at 1103. Corn is down 2 at 390, and wheat is down a penny tops at 546. Okay, quickly, I want to do charts first, right? Just zooming out a little bit. The dollar weekly and oil weekly. They're not the same chart by any means, but they are similar. You're trading wedges. Trend line lower, trend line higher. 10-year yield. Not a wedge, but similar to the dollar. Now, why am I bringing that up? Because look at gold. Up, scoop, and higher. By the way, measured move would tell you that this dip should become this rally, kind of like a mini cup and handle concept. Silver looks like gold. Mini dip, pulling back though, not performing like gold. So if silver gets above this line, which is, similar to Michael Oliver's levels, you're going to probably have an extension like gold. Remember, silver's following gold and then overperforming and then leading gold the next level. Crypto. Pull back like silver and gold, different time frame though, and now starting to break out from the bottom. There's a similarity here, right? Ethereum, same idea. Similarity, not the same. But what you have is hard money assets. Remember, we're in Trump world now, right? Hard money assets are resilient and thinking about the future. Palladium, you're looking for a rounding bottom, short term, hard to say. Platinum, your rounding bottom may be done and you're looking to come out above this. Anyway, that's just a quick chart comment. These are Today's and yesterday's posts, Trumponomics 2.0, mercantilism, corporatism, and higher gold. That was a different title when we were doing a video on that. Gold new all-time highs, people like that. We just put this out. We have some questions about NVIDIA. They're kind of rhetorical, but that's for founders. And Michael Every again. All right, so let's get to the main event here. Indian demand. Okay. You were given homework. So let's read a little bit. We have a report from ANZ Bank, and we've had it for about, I don't know, 5 or 6 days, and we shared it with founders. But today we're going to go through it, and we're going to break it out and share it with Premium now. India retains its golden sheen. That's the title of the report. Okay, India demand for gold is likely. These are their main points, and the first point is key. India's demand for gold is likely to remain strong in the face of higher prices, forecast of above normal rainfall, and the favorable macroeconomic backdrop should mitigate any impact from rising prices in the second half of 2024. Urbanization, rising per capita incomes, and a demographically young population are the structural drivers supporting demand for gold. Gold is China. India is China for these respects. Our technical chart, page 6, suggests a break above the record high price of 2450 will be critical to continuing upward momentum. All right, we have that, and we're going to share some of that with you now. Tomorrow, we're going to share the whole thing. But right now, we want to go through your homework. This is the chart that you were given and asked to look for patterns. Now, here's some patterns that you may or may not have seen. Right. So the first pattern is you may look at it as technically, right? But the patterns that I care about are the patterns that correlate these two charts. So you may notice, first of all, in the dark blue histogram, the demand will drop in general as price will rise between here and here, and demand will fluctuate as price rises between here and here. So the blue line, the blue histogram itself, demand has been fluctuating but dropping through, call it 2020. Demand has been, for periods of time, tied to the price of gold. Demand goes up when the price of gold goes down. Sometimes it will be resilient in the face of a higher gold price. That could be a comment on their economy doing well and them having more money. The other pattern that means the most to me is this. From 2016 through 2024, with COVID as the exception, their demand has been static. They've been buying the same amount of gold every quarter for years now. Years. What does that tell you? Well, that tells you that they don't want the gold. They need the gold. Look at it as a person with your own budget. You have limited resources. You have limited money, right? So the things that you need, you buy regardless of the price. The things that you want, you buy depending on the price, right? So for the last 8 years, India and other countries have been taking a larger percentage of their own fiat and putting it into gold. Now, they probably are putting it into other things as well, but gold doesn't do anything to help your economy. Gold's not innovative. Gold's a pet rock. Why would you need gold? Why would you, to put it in economic terms, why would your demand for gold be inelastic, regardless of the price? In fact, why would your demand for gold actually uptick in the last 3 quarters, despite the higher price? We're going to discuss that in Premium. But that's what we're talking about here, folks. We're talking about an era starting in 2016, 2017, where the demand for gold remained consistent regardless of the gold price. Now, you may ask yourself, well, what about COVID? What about COVID? Well, let's go back to that. During COVID, demand for gold dropped. Fine. We all understand that. Economies were potentially in a shambles. However, the demand for gold for them started to ramp down in an orderly fashion in last quarter of 2018, first quarter of 2019. Put your tinfoil hat on, but maybe somebody saw COVID coming. Anyway, but if you take this carve out, the demand is the same. Even leaving the carve out in, they've been buying gold since 2021, the same amount of ounces, more or less, every quarter, regardless of the price. In fact, see this dip in price? They bought more. See this rally in price? They didn't buy less. The point is, this is their baseline, and they're buying more when the price goes down. Everyone's floor has been raised. The question is, why has their floor been raised? And we'll talk about that a little bit in premium. Here's the chart that gives you the idea. Stable demand, higher price. Stable demand, higher price. Increasing demand, lower price, but at a new level. The floor has been raised for gold. All right, so I have a couple more charts to share with you and a little bit more detailed explanation tying it together when we get there. Data on deck. Today is housing starts. That's actually big. It should be big. All right. So the market right now is thinking rate cuts are coming in September for sure. Right. That's what they're thinking. Right. And they want it to come in July. So if housing starts are weak at 8:30, then the market will ask itself, are they weak enough for a July cut? Because if so, we're going to buy stocks. Right. And if they're not weak, how do stocks act? Because we're already assuming that there is a September cut. The point is stocks are really ahead of themselves. And I don't want to be, just outright bearish, but that's just the way it is. Yesterday's activity, a quick comment on that. That's so sadly obvious. Okay. They need to buy gold. So they're going to be buying dips, right? The sellers of silver are selling it for legitimate and mechanical reasons. The legitimate reasons it's being sold are, well, I think we're going to have an economic slowdown, a recession. I'll buy less gold, but I'm still buying gold. And I might sell silver as a hedge for stock. So silver will start to link up with copper a little bit more, and it will link up with stocks a little bit more, but at a higher level. Stocks are going to drop 10%. Copper might drop 10%. Silver is probably not going to drop 10% unless they crack gold. And now we get to the mechanical part. If you're long gold and the market is rallying and you do not want to get out of gold, you need to be long gold. You're a macro discretionary fund, but you want to hedge your gold. Well, you can hedge your gold by buying puts. You can hedge your gold by, they're not buying puts. You can hedge your gold by selling call spreads. They're not selling call spreads. You can hedge your gold by selling silver, which sells the economic aspect of gold, right? Or you could sell copper. Or if you're bullish gold, you don't want to buy gold, you could buy silver and sell copper. So it's kind of like a shit rolling downhill concept now. We need to be long gold. What can I sell against it? Silver, right? That's how CTAs always operate. You're familiar with that if you're a Goldfix subscriber. But now the macro discretionary are doing it. And the banks will do it to get their shorts back. That's my opinion. Anyway, the Republican convention is over. This market is very vulnerable over the next 48 hours. And then I see no reason why the trend would not continue higher. Even if it is tepid in the rally, the trend should continue higher because we're approaching the BRICS summit and the election. What happens to gold if Biden bows out? That's what you need to ask yourself. And I don't have the answer to that yet, but we're working on it. All right, stay with us. We're going to go with premium next. Gold is up $7. Silver's up 11 cents. So not a bad bounce for gold. I mean, a good bounce, right? And silver, not a bullish bounce. You want to be long on the hourly above this trend line. If we get back above it, if you want to be short below this structure, because this becomes a bear flag. On gold, you should just be long, right? I mean, this is just a trend line. Boom. Market gets away from it, comes back, gets away from it, comes back. Or draw a line at the top of this part of the channel and buy it when it gets 2 standard deviations below, sell it when it gets 2 standard deviations above. That's the way you do it. I'm Vince. Have a great day.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's specials include 2024 Silver Eagles from the U.S. Mint for only $5.95 over spot, and 2024 1/10 ounce Gold Eagles for only $39 over melt. And of course, you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Happy to answer any questions you have, give you pricing on other products, and help you get set up with whatever you need. So thanks as always for tuning in, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.